In the labyrinth of investment avenues, Warren Buffett's name stands as a beacon of wisdom, prudence, and unparalleled success. Dubbed the Oracle of Omaha, his acumen in navigating the tumultuous waters of the stock market has not only amassed him a fortune, but also a legion of followers eager to decode his investment philosophy. Berkshire Hathaway, the conglomerate he leads, is a testament to his investment prowess, boasting an astronomical average annual return of 21% from 1965 to the present. This figure starkly contrasts with the market's average, highlighting Buffett's exceptional ability to outperform the S&P 500 and turn conventional wisdom on its head. As we edge closer to 2024, a year shrouded in economic uncertainty and the specter of a looming recession, Buffett's insights are more valuable than ever. In a world where market sentiment swings wildly from fear to greed, his steadfast approach to investment offers a grounding perspective. Buffett's annual letters to shareholders are not merely financial statements, but a window into the mind of a genius, distilling decades of investment knowledge into nuggets of wisdom. His assertion that stocks are safe for the long run and they're very unsafe for tomorrow encapsulates the essence of his strategy: focus on the horizon, not the tumultuous waves at your feet. As we embark on this exploration of Warren Buffett's investment philosophy tailored for the unique challenges and opportunities of 2024, we invite you to engage with an open mind. Whether you're a seasoned investor or a novice, the insights distilled in this article aim to not only inform but also inspire. In a landscape brimming with uncertainty, Buffett's strategies illuminate a path forward, advocating for patience, diligence, and an unwavering focus on long-term value creation. So, as we delve into the economic climate of 2024 and unpack the wisdom of the Oracle of Omaha, let us ponder how can we apply these timeless principles to not just navigate but thrive in the investment world of tomorrow. Understanding the 2024 economic climate. As we peer into the horizon of 2024, the economic climate presents a mosaic of challenges and uncertainties that investors must navigate with caution and sagacity. The transition from a decade of relative abundance to a period marked by austerity signals a significant shift in the economic tides. Jim Mastro, Chief Investment Officer at Research Affiliates, overseeing strategies for over $130 billion in assets, ominously forecasts the U.S. teetering on the brink of this paradigm shift. This looming change is further compounded by persistent rumors of an impending recession, which, despite a resilient economy and low unemployment rates, have refused to dissipate. A recent Forbes column amplifies this sentiment, predicting a mild recession looming in late 2023-2024. The shadows of the great financial crisis linger as a stark reminder of the economic volatility that can ensue. Post-2008, while the average American's wealth appeared to swell, underlying this growth were two critical factors: unprecedentedly low interest rates and a surge in federal spending. Initially deployed as emergency measures during the 28-29 crisis, these strategies have since become mainstays, significantly influencing the economic landscape. The Federal Reserve's persistence in maintaining the Fed funds rate at near-zero levels for the better part of a decade, coupled with a ballooning federal budget, has pumped an unprecedented volume of money into the economy. Yet, as we stand at the precipice of 2024, the curtain is slowly closing on this era of easy money, ushering in a climate rife with anxiety and speculation. Despite these ominous signs, it's crucial to remember the resilience of the American economy. Even amidst inflationary pressures and global upheavals, the U.S. has demonstrated a remarkable ability to defy dire predictions, charting a course of growth at an annualized rate of approximately 2%. However, the true hallmark of a recession extends beyond mere economic stagnation. It encompasses job losses, decreased employment opportunities, and a reliance on government relief measures. In such times, the instinctive reaction may be to shield one's assets, converting them to cash or other liquid reserves. Yet, historical patterns in Buffett's own strategies suggest that economic downturns can also unveil unprecedented opportunities for investment and wealth creation. The key lies in understanding and strategically responding to the market's ebbs and flows, distinguishing between temporary setbacks and genuine opportunities for growth. Warren Buffett's approach during market downturns is emblematic of his broader investment philosophy. He views declines not as threats but as opportunities, famously comparing them to discounts on his favorite products. This perspective underscores a fundamental principle of investing. The market's inherent volatility is not a hazard to be avoided, but a landscape to be navigated with strategic foresight. As we delve deeper into the intricacies of Buffett's investment strategies, it's essential to anchor our discussions within the broader context of the 2024 economic forecast. The anticipated recession, the shifts in federal policy, and the changing dynamics of the global economy all serve as critical backdrops against which Buffett's advice must be considered. In the following sections, we'll explore how these principles can be applied to not just survive, but thrive in the uncertain economic climate of 2024, turning challenges into catalysts for building lasting wealth. Buffett's investment philosophy for the modern investor. Warren Buffett's investment strategy is a beacon of clarity in the often murky waters of the financial markets. As we face the uncertainties of 2024, his time-tested principles offer not just a strategy for wealth accumulation, but a philosophy for financial resilience. At the heart of Buffett's approach lies a profound simplicity. Invest in quality businesses at reasonable prices, focus on the long term, and view market downturns as opportunities. This section unpacks these core tenets, offering a blueprint for navigating the economic landscape of 2024 with Buffett's wisdom as our guide. Investing in quality businesses. Buffett's strategy emphasizes the importance of investing in businesses with strong fundamentals, companies that have a consistent earning power, durable competitive advantages often referred to as economic moats, and competent management. In the context of 2024's uncertain economic climate, this principle urges investors to seek out companies that can withstand economic fluctuations. These businesses are typically leaders in their industries, with products or services that remain in demand regardless of economic conditions. For Buffett, the intrinsic value of a company is paramount, a valuation grounded not in speculative future profits, but in the real and measurable value it generates today. The long-term perspective. Buffett's perspective on investment is inherently long-term. He famously stated, "Our favorite holding period is forever." In the face of 2024's looming economic challenges, adopting a long-term view can be particularly beneficial. Short-term market fluctuations, while potentially alarming, are less significant in the grand scheme of a decades-long investment horizon. This approach encourages investors to look beyond the immediate turbulence of the market, focusing instead on the sustained growth potential of their investments. It's a reminder that patience in investment not only is a virtue but a strategic advantage. Market downturns as opportunities. Perhaps one of the most counterintuitive yet powerful aspects of Buffett's philosophy is his view of market downturns as opportunities. He likens buying stocks during a downturn to purchasing dollar bills for 50 cents. Each investment made at a discount has the potential for substantial future gains as the market recovers. For investors facing the uncertain economic terrain of 2024, Buffett's approach offers a silver lining. Instead of succumbing to panic selling or sitting on the sidelines, savvy investors can use downturns as opportunities to acquire quality assets at lower prices. Application in 2024. How does one apply Buffett's principles in the specific context of 2024? First, by rigorously analyzing companies to identify those with strong fundamentals and competitive moats. This might mean investing in businesses that have demonstrated resilience in past recessions or sectors poised for growth despite economic headwinds. Second, by committing to a long-term investment strategy, investors can shield themselves from the knee-jerk reactions that often characterize volatile markets. Finally, by maintaining a reserve of cash or liquid assets, investors can position themselves to take advantage of market downturns, buying into quality stocks at discounted prices. Buffett's investment philosophy, with its emphasis on quality, patience, and opportunism, provides a robust framework for navigating the complexities of the 2024 economic landscape. By adopting a Buffett-inspired approach, investors can not only weather the storms of market volatility, but can emerge from them stronger, with a portfolio built for long-term growth. The strategy of investing during economic downturns. The specter of economic downturns, particularly as we approach 2024, can cast a long shadow over the investment landscape. Yet, within these periods of market adversity lie hidden opportunities for those equipped with the right strategies. Warren Buffett, through his decades-long investment journey, has shown time and again how downturns can be transformed into advantageous moments for building wealth. Here we delve into the essence of Buffett's strategy for investing during economic downturns, offering practical insights for navigating these challenging times. Embrace the market downturn as an opportunity. Buffett's philosophy turns the conventional fear of market downturns on its head. Instead of retreating, he advises investors to welcome these moments as opportunities to purchase quality stocks at a discount. The rationale is simple yet profound. Downturns often result in broad market sell-offs, during which even the stocks of fundamentally strong companies are undervalued. This discrepancy between price and intrinsic value is where savvy investors find their greatest opportunities. For 2024, amidst the forecasted economic turbulence, adopting this mindset can be particularly empowering. It encourages a proactive approach where downturns are not feared but anticipated as moments to enhance one's portfolio with valuable assets at lower prices. Conduct rigorous due diligence. The foundation of making wise investment decisions during downturns lies in the ability to identify which companies are truly undervalued versus those rightly discounted due to fundamental weaknesses. This distinction is critical and requires meticulous research and analysis. Investors should look for companies with strong balance sheets, consistent cash flows, a competitive moat, and the potential for long-term growth. In the context of 2024's uncertain economic climate, focusing on industries that are less susceptible to economic cycles or those poised for growth despite macroeconomic challenges can be a prudent strategy. Diversify wisely. While Buffett himself may favor concentrated investments in a few thoroughly researched companies, he also acknowledges the value of diversification, especially for less experienced investors. In preparing for 2024, diversifying across sectors and asset classes can mitigate risk without significantly diluting potential returns. This doesn't mean spreading investments thinly across numerous stocks, but rather selecting a handful of quality investments that offer exposure to different economic sectors and geographic regions. Such a strategy can provide a buffer against market volatility, ensuring that one's investment portfolio is not overly reliant on the performance of a single sector or market. Stay disciplined and patient. Perhaps the most challenging aspect of investing during downturns is maintaining discipline and patience. The market's short-term movements can evoke strong emotional responses, leading to impulsive decisions that diverge from one's long-term investment strategy. Buffett's approach is grounded in a disciplined adherence to fundamental analysis and a steadfast commitment to long-term goals. For investors facing the uncertainties of 2024, this means resisting the temptation to react to short-term market fluctuations. Instead, focus on the intrinsic value of investments and the long-term horizon, understanding that market recoveries can often take time to materialize. Looking ahead, building wealth in 2024. As we look towards 2024, with its potential economic challenges and opportunities, Warren Buffett's investment philosophy offers a timeless guide. By viewing market downturns as opportunities, conducting diligent research, diversifying wisely, and maintaining discipline and patience, investors can navigate the turbulent waters of the financial markets. The essence of Buffett's strategy, investing in quality businesses at a discount, with a long-term perspective, remains as relevant as ever. The strategies outlined here are not merely theoretical. They are practical, actionable, and grounded in the wisdom of one of the greatest investors of our time. As we prepare for the uncertainties of the coming year, let us take a leaf from Buffett's book, Embracing the Opportunities That Market Downturns Present and Positioning Ourselves for Long-Term Wealth Building. Navigating inflation and interest rate hikes. In the current economic forecast for 2024, two significant factors that investors need to account for are inflation and rising interest rates. These elements can erode investment returns and alter the financial landscape dramatically. However, Warren Buffett's investment strategies offer guidance on how to navigate these challenges effectively, ensuring that your portfolio not only withstands these pressures but potentially thrives. Inflation and the quest for resilient investments. Inflation reduces the purchasing power of money over time, which means investors need to seek out investments that can outpace inflation to preserve or grow their wealth. Buffett has long advocated for investing in businesses with strong pricing power and the ability to increase earnings over time. These companies can raise prices without losing customers, maintaining their profit margins even when costs go up. In the context of 2024, investors should look for companies in sectors that are less sensitive to economic cycles, such as consumer staples, healthcare, and utilities. These industries often provide essential services that remain in demand regardless of economic conditions, allowing them to pass on cost increases to consumers. Additionally, technology companies that offer unique, high-demand products or services can also demonstrate strong pricing power in inflationary environments. Interest rate hikes and the cost of money. Interest rate hikes, a tool used by central banks to combat inflation, can have a profound impact on investment valuations. As rates rise, the cost of borrowing increases, which can slow economic growth and reduce corporate profits. For the stock market, higher interest rates often lead to lower price-to-earnings ratios (P ratios), as investors demand higher yields to offset the increased risk. Buffett's approach in an environment of rising interest rates emphasizes the importance of owning businesses with durable competitive advantages and low debt levels. Companies that can generate significant free cash flow without relying on external financing are better positioned to navigate higher interest rates. Furthermore, investments in fixed-income securities, such as bonds, become more attractive as interest rates rise, offering investors a safer, income-generating alternative to stocks. Implementing Buffett's strategies in 2024. Investors preparing for the challenges of 2024 can draw on Buffett's wisdom in several ways. Focus on quality. Prioritize investments in companies with strong balance sheets, robust cash flows, and clear competitive advantages. These firms are more likely to withstand economic pressures and maintain profitability. Consider fixed income diversification. With interest rates on the rise, allocating a portion of your portfolio to fixed income securities can provide a stable income stream and reduce overall volatility. Be opportunistic. Use market downturns as opportunities to buy quality stocks at discounted prices. A disciplined approach to investing, focusing on long-term value rather than short-term market movements, can yield significant rewards. Stay informed. Keep abreast of economic indicators and central bank policies, as these can have a direct impact on investment strategies. Being informed allows you to adjust your investment approach as the economic landscape evolves. Buffett's investment philosophy, centered on buying quality assets at a fair price and holding them for the long term, is particularly relevant in the face of inflation and rising interest rates. By adhering to these principles, investors can navigate the uncertainties of 2024 with confidence, positioning themselves for sustained wealth creation. Building a resilient investment portfolio in 2024. As we move into 2024, with its unique set of challenges and opportunities, the wisdom of Warren Buffett provides a guiding light for constructing a resilient investment portfolio. Amidst the uncertainties of inflation, interest rate hikes, and potential economic downturns, Buffett's principles of prudence, patience, and focus on value stand out as essential components for successful investing. This final section delves into creating a portfolio that not only withstands the test of time, but also capitalizes on the opportunities that volatility and change bring. Emergency savings, the foundation of financial stability. Before even considering portfolio diversification or stock selection, Warren Buffett emphasizes the importance of having a solid financial foundation. This begins with building and maintaining an emergency savings fund. In the unpredictability of 2024, having a cash reserve covering 3 to 6 months of living expenses is not just advisable, it's imperative. This fund acts as a financial buffer against unforeseen circumstances, reducing the need to liquidate investments at inopportune times, which can derail long-term investment strategies. Patience, the virtue of the wise investor. Buffett's investment success is as much about the stocks he chooses as it is about his unparalleled patience. In the fast-paced world of stock trading, where short-term fluctuations often trigger knee-jerk reactions, Buffett's approach is refreshingly simple. Focus on the long-term potential of your investments. For those navigating the economic landscape of 2024, adopting this long-term perspective is crucial. It means not panicking in the face of market downturns or becoming overly exuberant during rallies. Instead, wise investors remain steadfast in their conviction in the intrinsic value of their holdings, allowing compounding to work its magic over time. Portfolio management, discipline over impulse. The composition and management of one's investment portfolio are where Buffett's principles come into practical application. Beyond the selection of quality stocks, effective portfolio management in 2024 demands a disciplined approach to rebalancing and a commitment to staying the course. Buffett warns against the dangers of overtrading and the allure of timing the market. Instead, he advocates for a focused portfolio of companies that one understands deeply and believes in strongly. For investors in 2024, this means conducting thorough due diligence before making any investment and resisting the temptation to react to every market movement. It also means being mindful of transaction costs and tax implications, which can erode returns over time. Additionally, investors should regularly review their portfolio to ensure it remains aligned with their long-term financial goals and risk tolerance, making adjustments as necessary, but always with a strategic rather than reactive mindset. Navigating 2024 with Buffett's timeless wisdom. As we stand on the cusp of 2024, facing a confluence of economic indicators and market sentiments, the investment philosophy of Warren Buffett offers both a beacon of clarity and a framework for action. His principles investing in quality businesses at reasonable prices, exercising patience, and managing one's portfolio with discipline are more than just investment strategies. They are a philosophy for financial well-being. In an era marked by rapid change and uncertainty, Buffett's approach reminds us of the value of fundamentals, the power of compounding, and the importance of equanimity. By applying these timeless principles, investors can navigate the challenges and opportunities of 2024 with confidence, building wealth not just for the immediate future, but for generations to come. The journey through Buffett's investment strategies, from understanding the economic landscape of 2024 to the specifics of navigating downturns, inflation, and interest rate hikes, culminates in a comprehensive approach to wealth creation. This path is not devoid of challenges, but armed with the insights and strategies inspired by one of the greatest investors of our time. We are better prepared to turn these challenges into opportunities for growth and success. The wisdom of Warren Buffett, encapsulated in his annual letters and decades of investment success, serves as a testament to the enduring power of value investing. As we move forward into 2024, let his philosophy guide us in making informed, strategic, and patient investment decisions, laying the foundation for financial prosperity in the years to come.